Let's take a look at some information and charts on Yearn Wi-Fi for BraveNewCoin. So Wi-Fi is a vault DEX aggregator, has a governance component as well. How this works is it shifts funds between various lending protocols, including Aave, Compound, and DYDX. And it has a governance component, although most people aren't trading the token for the governance aspect of it. The creator of the token said that it shouldn't have any value, yet here we are. This is another case of DeFi stuff. I love the product. I use the product. The token makes 0 sense to me whatsoever. Nevertheless, we will break it down in this video. And how it works on the site or the app or dApp is you can connect a wallet, simple enough. Interoperability amongst all this stuff is extremely high. Then you can approve a certain amount, lend it out, put it in a vault, do whatever you want to do. And you can look at APYs where would be most effective and efficient based on your risk profile or whatever, right? But in general, this stuff is extremely valuable and useful to be maximally efficient with vaults and yield farming and setting it away and forgetting about it, not having to move it manually yourself, worry about gas fees, that sort of thing. So from that regard, great product. Here's total TVL, very near all-time highs. Among a few products, V1, V2, Yearn, I forget what IB is exactly, and special or other. So people are still using it. I mean, it hasn't gone anywhere. It's still a relatively new product since late 2020 and hasn't necessarily waned with popularity of DeFi or gas fees. If anything, as gas fees go up, stuff like this gets more popular because it gets prohibitively expensive to min-max your yield farming yourself. You can just let a protocol do it on its own. Now, as far as the token, again, everything I'm about to show you is pretty bearish. No other way to really skin this cat. Transaction counts all-time low, sitting here 630, 666. Now, all of these DeFi tokens are not really going to move for any reason other than trading. So it's maybe a more pure form of what's really going on with speculation of the token itself. For the most part, they sit on an exchange in a wallet and they trade, right? They don't really move around the chain. Average transaction value is kind of flat with price, nothing to really comment on there. Active address is all-time low, NVT all-time high. Again, that's not a bullish picture. NVT is an inverse metric of economic utility relative to price, and you don't want NVT rising if you're bullish. And active addresses, that kind of speaks for itself. Not a lot of people, there was a lot of hype about this thing very early on, especially relative to its price. And that has all seemingly waned significantly with NFT stuff. It's almost like NFTs came around and killed stuff like Wi-Fi, the token price, because it was so expensive. Like, you can buy a fraction of a Wi-Fi, but there are all sorts of jokes about getting into the Citadel with your Wi-Fi and all this other stuff. I'm just looking at these charts thinking, well, that's certainly changed significantly from that period of time. Looking at MVRV, which is a measure of market cap versus realized cap, for most coins, a 2x multiple is the top. For this DeFi stuff, there isn't really enough data just yet to really understand what the top will be or should be or could be. But based on limited data since September 2020, the highs in price have corresponded with a 1 in MVRV. 1 or above for this token so far has been overbought territory. It's currently 0.96 and price is falling pretty dramatically here. So if anything, all these DeFi tokens that don't really have a use case beyond just existing, like Wi-Fi, need some time to figure out what they're going to be when they grow up, because I can't think of a compelling reason to buy and hold the token itself. Even when the token was appreciating, the fundamental case for holding the token made no sense to me. One other thing to mention for the fundamental side of things is the shrinking yields in general over the past few months especially. These are the USDC yields here, pretty much on par with each other. DAI kind of flattened out. ETH still relatively high on Compound compared to everything else, but at 0.1%, that's nothing. And BTC yields also basically zero. I've had a few people ask me why on the enzyme stuff I'm not lending out the BTC or ETH, and the yields are basically zero, so it doesn't really make sense to do so. If we have a chunk of USDC in the enzyme stuff, that's where I like to yield that out, because on Yearn, you can get a decent yield even with the low yields across the board currently. Flipping gears to technicals, we have the 5200 EMA, monthly pivots, VPVR, volume, RSI. So right off the get-go, this thing does not look bullish at all. It has a bearish 5200 cross. It looks like it wants to retest previous lows or lower. I mean, it's below the VPVR levels. The next stop is between 22 and 24. Now, if it cannot hold that level, watch out below. It's going to look a lot like it did in October, November 2020, when a bunch of activist long people came out and went after some on-chain shorts or whatever the heck they did. Trend metrics are flipping freshly bearish. The rest of the market is looking particularly soft over the past day or two. So if you're bullish, you don't want to see lower lows. You need this back above 33K to 36K based on VPVR, back above the 200-day moving average. But this does not look longable, touchable. It just looks real bad. Because it broke above resistance and now it's back below support again. And there's not much support below that 24K level, like I said. Daily cloud is bearish, definitively. It's out of the cloud. It attempted to break into the cloud, attempted an edge-to-edge move that got swiftly canceled as it broke below the cloud and the Kijun. So you were stopped out in here if you long 37, 38.5, whatever this is, based on that edge-to-edge expectation, right? It had a chance to reverse, but it did not want to go. Not enough buyers there relative to sellers. So if you're bullish on this, I would wait into, at this point, November probably, assuming this goes flat and sideways until then. We may see some late rotations. If Q4 is bullish, we may see some late rotations into altcoins like Wi-Fi later in Q4, November, December. And the cloud would line up with that, because unless this thing is above 37.5, it's not bullish. It's just does not look good. 12-hour, same story. Freshly bearish. Kumo twist here. Maybe you could argue falling wedge, but I wouldn't. I'm not buying that. Have fun. It's not for me. This thing, it has to have a fundamental value, and I just don't see it. Again, I can't comment on that enough. It just doesn't make sense why it even exists. Wi-Fi BTC attempted a double bottom a couple months ago, but 5200 cross has been bearish since June, and it's just continued to drift at sea, lower, 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 into the nothingness of no one caring about it. I mean, that's the ultimate bearishness for any altcoin. Low volume drift to the downside, week over week decline. VPVR is at 0.88 as far as the level to watch. The 200-day moving average is there too, so I would watch that. If you want to be bullish, it's above those levels. Now down here, there isn't even a bull div yet. At least here there was a bull div, so it isn't really even a knife stab catch for me. Maybe you could argue buying this range between 0.5, 0.6, something like that, but I'm not touching that. Now this is interesting, Wi-Fi ETH, because it does have a bull div right off the get-go on volume and RSI. It's basically at all-time lows, effectively, and it is at the bottom of a bearish pitchfork, pretty far away from the 200-day moving average. I wouldn't buy this anyway, but there's a decent setup here based on all the bearishness. I mean, if this goes any lower, where does it cascade to, right? This wick low, it is also bearish to see declines of volume here, to see it get denied at the 50 moving average, denied at the midline of the pitchfork. This is why pitchforks are valuable to me. It paints areas and levels of expectation based on the rate of change many months prior to anything happening, right? So if this thing pulls up, probably pulls up to the 200-day moving average at around 16, but this has been bearish basically since January. It's kind of done a whole lot of nothing, and it just looks terrible, really. There's no good way to paint this. I like to say it looks bad enough to buy, because there's no hope here. This is just soul crushing down for months and months and months and months. Lastly, I'll just mention the BTC and ETH fund and DeFi portfolio. I trade for Techme Capital on Enzyme.finance, a non-custodial portfolio management tool where you can send ETH or USDC or just watch what I'm doing. You can see everything, including AUM performance allocation. You can see me in the Yearn vaults here. You can see me link Yearn vault, all sorts of Yearn vaults, comp, Aave, and you can see the trades on the trades tab down below. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.